All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic, or having a fantastic holiday season. It's been one that's been quite memorable for the markets out there, and what's going on out there has been quite unique for this time of year. A lot of times this time of year, you see some tax buying, some tax selling. You get a little bit of up, a little down, but generally pretty darn quiet. It's anything but here this year. And in fact, the market has kind of gone into this last trading week of the year in a very, very sour mood. And we saw it on Monday. Which was just a 3-hour session. And I think that's what makes it so incredible is the fact that all of this could happen in a 3-hour session. And we saw overnight futures at 24.34, and it wasn't like they were in an overbought situation. They were in a very oversold situation and managed to get all the way down to 23.40 here by the close, and almost 100 points on the S&P. And in the middle of that, there was a rally, about 40 points worth of a rally in less than an hour. Less than an hour for that to happen. Incredible price volatility, incredible price movement. Out there, it's very clear the market doesn't know what to value things at, where to value things at. It is very clear that it's baby bathwater, all those cliches that are thrown around the market, that is all happening. The whole blood running in the streets. It's very clear that it's about as bloody as we ever tend to see out there. But what has been clear as well is that we haven't seen the bulls take any type of control. They haven't taken any type of advantage. No matter where you look, you can't really argue anything bullish except to make this oversold argument or to make an argument that we're seeing China, emerging markets outperforming, just a little bit, but they're not outperforming in a way or with other things confirming them. It's kind of a little island of bullishness, not enough to really push things here. We've seen bottoming volumes come into the market and get wiped out. We have seen incredible rallies come in, get wiped out. We've seen bottom calls by famous investors get wiped out. We have seen, we've seen Fed action that just basically gets sold. We've heard U.S. president commenting on everything here. It's kind of a runaway train right now out there in the market, as it suffered one of its worst weeks last week, and really took it on the chin, and has only continued here this week. Now this morning, I look and I go, okay, for the challenge, I'm pretty much in cash, and I got to make my next trade count. It needs to pay off. Path of least resistance on the market is lower, but put values are pretty extreme, and rightfully so. In fact, option values themselves, we talked about it last week. I think this is the worst option environment that I have seen in my trading career. And I've traded through financial crisis. I traded through flash crash. I've traded through, European debt crisis. I've traded through a lot. And this is the worst option environment that I've seen. And I kind of showed a little bit of it on Monday, and how you can't even get some of those spec plays for real cheap. Even the spec plays are very expensive out there. That is just the way it is. Now, it's my job to find a spot and find something that I'm comfortable with, and to put the odds in my favor and make sure that, we get this challenge rolling here in the right direction as we kick off 2019. At the same time, I'm not going to jump on in when I look and I go, wow, this is the worst environment. So I need to have something change, right? I need to see some sort of change. Two things that I'll be looking for. I'll be looking for a rally to occur, right? But not just any rally. I mean, we had a rally on Monday. The market rallied 40 points in 40 minutes, basically. Right? But one thing that didn't happen on this rally is we did not see option values get any cheaper. In fact, as I went and looked at some of my favorites, option values in some of them actually looked worse. They weren't worse, but, considering the move that they had just made, they were not exactly in a very nice spot. So I need to see, some sort of rally with option values coming on down. And then I'd prefer to see a little bit of change in the metrics. I'd prefer to see something where, we can look and say, hey, you know what? We have some life here, some life there starting to come in. And until we see that, the chances of seeing the bears continue to kind of sell these rallies and sell them aggressively is quite elevated. And so will we see that here today? Will we see that go on? As I'm talking this morning, you can see S&P futures, jumping here. In fact, they're up about 15 points since I got on. The market here is looking now at about a 13-point open higher. Yeah, fair value is about 10 for the bears here. So we're looking about the market right where it sits now, opening up at its lows from Monday morning and kind of just before the landslide kind of sell action that we saw into the close here on Friday. So it'll, if this gap holds, right, it'll erase the last hour action that we saw here on Monday. That's a first step, just in terms of price action. That's a first step. That tends to be fairly positive. That tends to hold, right? And we haven't seen this happen very much. We haven't seen a morning rally or a morning gap erase the prior day's action in the last hour. That just has not been happening here of late. And so it kind of, if this holds, and again, it's a big if. We can see the market, we're still about 2 hours from the market open. We can see, a 2-3% move still here on S&P futures. But if this were to hold, that's first step. That's a first step. Right? Option values would not compress right away, but en masse, if the market opens right here, we're going to see option values cool it a bit. They're going to contract a bit. They're going to come on down a bit. The other thing that I want to see is that the buying that we see out there is it's in the right sectors. It's in the right groups. A rally that's just simply based on, utilities getting bought up or consumer staples or even healthcare, right? Even healthcare. A rally based on those doesn't mean a heck of a whole lot. In fact, even if we're talking about a rally in consumer discretionary names, your retailers, I don't think it means a ton. I think this is one of those where the transports have to bottom for the market to bottom. The transports have to show some life. And if we don't see anything coming into the transports, I don't think we're talking about anything meaningful in terms of a rally that, has a high potential to continue. If we see life really come into those transports, then we're talking about something a little more material from a change standpoint here. So anyway, there's not a lot of news out there that we can kind of look at and say, point to this and point to that. U.S. President Trump had a whole bunch of comments here of late, a bunch of tweets bashing the Fed again, which I think is only going to create more consternation for the market. Talking about government shutdown and all of that. Let's face it, those are ripples and waves that come into a market. But what drives markets? Earnings and economics, and this is one where the economics are driving it, and the concern for 2019 slowdown have been the absolute driver here, and we're actually starting to see in the data evidence that things are slowing. And we saw it in some of the purchasing managers indexes, and we're not going to get a ton of data here this week. Right? It's not going to be a data-packed week, and generally first date of a new year, holiday stuff in it. It's not a fantastic read, so I don't think we're going to get anything real concrete anytime soon. And I think the next time that we get something really concrete for the markets is earnings season. And as we start to go into earnings season here in January, we have some mixed bags. Some FedEx versus Nike, Micron. We've seen some early earnings, Adobe, and they've been very different. They've been very, different in terms of their implications for earnings going forward. Where you can look at Nike and you can say, hey, this is a pretty positive story. But it does look focused on Nike. It doesn't look like a positive story economically, where you can look at something like a Micron and you can pull a very negative economic story out of it. So, we see the market. The market doesn't have anything really that positive to sink its teeth into and to run with. So, bottom line for the challenge, I'm not looking at anything right here at the open. That could change. I'll be watching things, but most likely it'll be kind of like Monday, where I'm looking at the day and saying, okay, you know what, do we have any material change that happened today that suggests that going forward things are going to be a little bit different? While yes, we could be off to an early decent start, let's face it, market could be 100 points different by the close of the day today than by the open. Now, I got a question here yesterday that I did want to address, and I asked, hey, Jeff, where's all the money go when we see a sell-off like this? Who's getting all the money? What's happening? Where's that money at, right? And a lot of times in the market, there's this idea that it's a zero-sum game, that it's money in and money out, and you hear some very infamous people, talk about that. Well, somebody's always making money when somebody's always losing money. The reality is that's just not the case. The reality is that just because money is coming out of the market, it doesn't mean it's going somewhere, right? We have seen a devaluation of the market. And a lot of that is not, money has come out and gone somewhere else. A lot of that is just, nope, money's now worth less. You think about some of the gaps. You think about some of the velocity of sell. There are a lot of stocks, they took a lot longer to go up. They took a lot more money flow to go up, right? They took a lot more buy pressure to go up than they take sell pressure to go down. And that is a reality. And you don't need, just because you see a sell-off doesn't mean, big money came out and now it's got to go somewhere else, right? There's some of that, but it's not 100%. It's not this 100% game where, the net pot for the market is still the same dollar amount, and now it's just being distributed differently. Now, the net dollar amount for the market has shrunk, and has shrunk in a big way. And we see that happen on the way up. It increases. On the way down, it decreases. It's not, it's not a zero-sum game. And, that we can see in the gaps. We can see because, market makers, they kind of set the prices there. And, they don't just say, well, if we see $10,000 come in on the bid, then we'll tick it up, or we see $10,000 come in on the ask, we'll tick it down or something like that. No, I mean, they'll different market environments, they're not going to support prices, right? So it's not like you have to have a ton of sellers to force that stock down in a big way. And then there are other environments where they'll be very supportive of prices. So you need a lot more money flow to really change the price on that stock. And so, that's what the market's kind of going through. This isn't something where, all this money came out of the market, now it's got to go somewhere, right? You hear those arguments, and a lot of times it's a stock to bond type of flow. And we could argue, yes, so we have seen a lot of money flow into bonds. And the reality is we have seen a ton of money flow into bonds. And, but it's not all the money that's come out of stocks has flown into bonds or anything like that. It is, it's one of those where there are many funds and many fund managers that have had a very serious net deflation. And, you don't necessarily see that as an increase in other funds and other for other fund managers out there in the marketplace. Okay. All right. So anyway, again, holiday season here. I know most of you have better things to do than sit and wait for me to comment on things or wait for me to make a trade. I'm looking for something where the odds are strongly in my favor. This is something where I'm not going to buy anything here on the open, given what the open's going to look like, here. And obviously the open could change, quite dramatically. But this is something where I'll kind of take a look again about a couple hours after the market opens, see what's happened with some option prices, some price action, and look to see if there's something to go out and take advantage of. And if there is, I'm very anxious to do so. Very eager to anxious, not the right word, eager to do so, and ready to do so. But again, I need it to be the right opportunity and the right trade here to work for me in the short term, and have that potential for a strong trend ahead. Thanks for hopping on. Hope you're having a fantastic holiday, and we'll talk to you later. Take care.